Kevin Hincks is with me, co-host of Fast Market Live at the CBOE. It's good morning to you. I guess the takeaway here and the up arrows, people tell me, is that it could have all been so much worse. At the same time, we don't see the ceasefire working at the moment. Your thoughts? What's going on?
Good morning, Nicole. The overall temperature seems to have come down, but it's not gone, I think, is what the key takeaway right now is. Crude oil's telling us that some of the tensions are easing. Stock futures higher are telling us that some of the tensions are easing. But if you're watching the headlines this morning, it doesn't appear like all of the tensions are easing. So there's still some uncertainty out there. There's planes in the air. Are they getting called back? Are they dropping bombs? Is the ceasefire holding? There's a lot of questions out there. The market right now seems to be feeling better about the overall tensions between Iran and Israel and President Trump's comments. But as you saw by President Trump's comments early this morning, the situation is still very volatile and still very uncertain about what's going on. He's negotiating a very fragile situation here between these two countries that, he admits have been fighting for a long time. So, I think today's market is still going to be driven by headlines. Right now, the headlines are leaning more positive, but they're not 100% positive. And then we have to deal with what we're going to see today back here in the United States, which is Jerome Powell's about to have a very contentious testimony before the House of Representatives today and the Senate tomorrow, where it's probably going to get a little, there's Republican senators, they're going to push him on why he's not lowering interest rates. And now, since Friday, you've got Waller and Bowman and yesterday Austin Goolsbee all coming out talking about July rate cuts. So we've got geopolitics, right, look like they're subsiding, but not all the way. There's still risk there. And now you've got Jerome Powell coming before Congress. So there's a lot going on here for a summer Tuesday, Nicole.
Yeah, understood. Right now we're going to hear from Powell today and tomorrow. As you noted, we'll have that testimony. You have several voting Fed members now that seem on board for, or at least open to a rate cut. July is shaping up to be quite exciting, though the rate cut probability is still just at 16.5%. Because even if they were the ones of the 19 Fed members that we were talking about that were voting for some cuts, you still had half the committee last week talking about one or no cuts, right? Let's see. 7 of the 19 members, no cuts. 9 penciled in 1 or no cuts. 4 rate cuts over 3 years. So let's see what happens. The housing data is starting to come in too. And we did get a little bright spot yesterday when it came to housing. But for the most part, the high mortgage rates and things have sort of stalled a bit. But yesterday we got a nice print. What are you seeing today?
Yeah, yesterday's housing data was slightly positive, right? Slight upticks across the board. Today we just got Case-Shiller home price index that shows 20 city month over month down 0.3. 20 city unadjusted month over month up 0.7, and 20 city unadjusted year over year up 3.4%. Each one of those a bit lower than the prior number. Now, that's the Case-Shiller. In terms of the FHFA, similar story. Down 0.4 month over month, up 3% year over year. All numbers. We just got 5 economic numbers on house price indexes from 2 different services, all slightly worse than expected and worse than last month. So house prices. But here's the thing. If you're making a case for lower rates, housing inflation, such a key part. Look at all these numbers coming down. That's got to start showing up in some of the housing inflation data. So you've got crude oil basically crashing here from the high 70s, almost 80s, down back into the mid 60s. And now you've got housing data that is coming down hard and missing across the board. Eventually, that's got to start showing up in the inflation data, Nicole.
Right. Well, we'll get more and more, as you noted. I mean, we'll have more throughout this week. We have new home sales, existing home sales, and more durable goods, as you noted earlier, the mortgage app. So looking forward to that, and consumer confidence, right? That'll be later. Tell me about that a bit.
Yeah, consumer confidence expected to tick up from 98 last month to 99. We'll see where that one comes in. Remember, that's the conference board. Remember, this is more that soft sentiment data. We'll get consumer sentiment on Friday. These are those numbers that are more opinionated than actual hard data. And so they've been a little volatile. They've skewed political. Conference board and University of Michigan have both stated that they skew a bit political. So we'll see how this comes out in some of these soft data. And then you have to answer the question to yourself, do you listen to this data, or are you just paying attention on the hard data, which we're getting later in the week when we get PCE and core PCE with personal income and outlays. So yes, soft data, always a contentious discussion topic here. We'll get consumer confidence in, about an hour. Nicole?
Oh, yeah. And that PCE print, that is the Fed's favorite when it comes to inflation. So we will all be looking at that one very, very closely, as you noted. All right, Kevin Hincks, great to see you. Thank you so very much.